Welcome back to the channel. Apologies, I was a bit sick this past few weeks, and so I didn't take out create a new video. But the portfolio today is sitting at about $1.2 million so far. If you remembered, I believe in my previous video or so, I think it was about 1.05 million, and then the portfolio basically moved about 100K basically. So you can kind of see, right, most of the time in the market. As long as you stay in the market and you literally don't do anything, I don't know whether you realize, but I have not done anything for a very long time. So the more you don't do anything, actually, the more money you make. So the most important thing is that you research the correct thing before you buy, and then you just let time do its thing. Honestly, so that's what I've learned over the years, and that's why even though um, if you can see like if you actually do watch my videos, right, I'm very zen. Like I don't really have like high emotions or like low emotions. It's just like, oh, it's just a number, so it's like I just wait for the number to go up basically. Okay, in this video, just want to give a quick update on the portfolio side. So I did deploy a bit more cash. So I think previously I had about like 50K or so in cash. I did buy more Meta Planet, just letting you know. But yeah, just a side note right there. Okay, in this video, I'm going to talk about when do you sell your stocks. So we had a subscriber. She basically asked this. So thank you so much for commenting. By the way, this is how I get video ideas. So basically, our question is, thank you for this very detailed video. We would love to see how you determine when to sell in reference to your other videos on HIMS. You said you likely sell at $1 million. How do you approach selling these bets? Is it a particular ROI threshold, or do you sell when it becomes too big of your portfolio? How do you think some of these strategies, and how do you rotate these stocks around? Okay, so there's basically two parts to a question, and I'll basically give you a guide. I'll try to give you a full guide on basically how should you think about when to sell your stocks. Okay, so I'll also give you some examples of myself in the past, so then you can kind of map my experience to your experience, and you can kind of see whether we have the same experience or not. All right, so but this is how I think about how whether you should sell your stocks in the first place. Okay, so the first thing, when do I sell stocks? So I sell stocks when I feel that the company fundamentals change. Okay, I'll give you an example here. I own ticker symbol CRWD for a while, and this is basically a cybersecurity company. It's called CrowdStrike, and they're basically a very fast-growing cybersecurity company back in the day. I mean, they still are growing, but they have become very big already. And yeah, you can see $122 billion market cap. All right. So if you are not aware, this company right here, at one point in time, they were like the fastest growing juggernaut in the space in cybersecurity. And yeah, I was basically like making some money. And I think I bought about 30K or so worth of this stock right here. And then in July 2019, 2024, so basically last year, this company basically had a big scandal. Okay. They are in the business of cybersecurity, and they basically caused a ton of their clients to go into IT blackouts, causing a ton of disruption in the space. And their reputation is basically hit, right? And you're a cybersecurity company, and you can't even do your job. Basically, you can't even like protect your own IT services, and so it costs a lot of companies. And the companies that they serve, for example, they're like Microsoft, they're like Google, stuff like that. So they're actually a very massive company in the space. Okay, so when this happened right here, the stock price basically took a massive dip. Okay, it basically took a massive dip, and I'll just try to show you that what happened there. Okay, so July 19, 20, okay, there we July 19, is it here? Ah, yeah, okay. So yeah, it's basically this dip right here. Okay, so you can clearly see like the share price, it went from $385 all the way to $224. So it took almost what a 30 to 40% dip in its value over the next few days. Okay, I basically sold here. I think I sold like I sold early on because I got burned by Alibaba before, and I realized that when the company gets a reputational damage, right, it does not matter whether the fundamentals matter or not, right? If people perceive your company as a terrible company, they're just gonna stop buying your products basically, right, for quite a while, and it'll take some time. It'll take some trust for the management team, for the company itself to actually regain that trust once again. So stuff like this, you do need to consider, and that's why I sold it at basically over here when it was dipping already. I saw the news and I basically sold it immediately because I know what was gonna happen. I've been through the Alibaba thing, and I know it's gonna sharp dip. I also did know that the stock price will recover in the future, and you can see like it is back into all time highs. But I also do know like it will take some time to recover. You can see like from the high here, it took what, July all the way to February, right? So it took almost half a year or 8 months to basically for the stock price to recover, right? So these things you just need to take note, stuff like that. Okay, this are like pretty rare in a sense that um, when the company's fundamentals change, it's like normally a disaster or like the business is slowing down drastically. Okay, this is an example of a PR situation. So I'll say CrowdStrike is more a PR and not really fundamentals, but it does affect the perception of the company, and so it affects future sales. And so I kind of consider it as fundamentals as well. That's the first thing. All right. I guess the second thing, fundamentals, how does it change? Another company that has saw their stock price like get destroyed is basically UNH. So UNH is a private hospital company in the US, for example, and then their stock price basically got pummeled because I think the insurance claims or the premiums, something like that, where or like their profit margins were basically going to get wrecked. And you can see here, like once the news was announced that the guidance was going to be soft or like the premiums were going to be lesser, right, it's going to affect future profit margins, and then investors basically sold the stock right here. And so you can see like the destruction of the stock price, right? It was an all-time high of about 594, and it goes all the way down to 245. So it was almost what, a 50-60% drop right there. Yeah, pretty crazy stuff. But when the fundamentals change, the sentiment about the stock changes. Okay, when the sentiments about the stock changes, right, you cannot fight this train. It's like a moving barrel. Like it's gonna go down. So you should not try to stop it. You should try to just cut your losses immediately if you can. Okay, so that's the first time or the first thing, first factor you should consider when you should sell your stocks. That's number one. Okay, the number two is like when you feel like the stock is taking up too big a percentage of your portfolio, and so you want to reduce your risk. Okay, so for example, for me, I have about, let me check, I think I have about 40% of my portfolio in one single stock, and I have the other 30% in Bitcoin, right? So you can see here I have about 40% in HIMS, and I have about 30% in Bitcoin, about 20% in Robinhood, for example. For me, for example, the reason why I feel so comfortable with this very big percentage is because like I've researched the company a lot. Okay, so you may not have the same amount of conviction as me in your company, but because I've researched this company, I totally understand what they do. I know how they acquire customers. I know what the headwinds are. Most of it is regulatory. Basically, like the government is coming for their ass. But apart from that, they actually execute very well in the marketplace, right? So I'm okay that the fact that like my net worth is basically going up and down, very volatile, and is really dependent on the stock price of HIMS, basically. But because I've researched the company so much, right, I'm okay holding it at such a big percentage, basically. You can see here, it's like such a big percentage. All right. And also, to be fair, I have a very low cost basis. So you can see my returns about what, 930% right here. So it's like, even if it goes down, for example, right, I don't care. Like, I just want to hold it for the long term because I believe in the company long term. Okay. But if you yourself, for example, are scared, right? You're like, oh shit, I have a company that it suddenly became a very big percentage of my portfolio, and then I want to sell it because it seems like it's like, holy shit, it's taking up a lot of my net worth, and I'm not very comfortable with my net worth basically like moving very very aggressively every single day. Then probably, yeah, don't. Then you should probably sell the stock, right? So for example, for me, you can see, right, HIMS, right, even though it's like at a high right now, um, over the past 6 months, I believe every HIMS holder right now, they totally understand the situation. Um, yeah, the stock price has not actually been very good, or in a sense, it's not been very stable, right? So it does not really give a lot of confidence to the shareholder that this thing's going to go up in the long term, right? So I'll just show you the stock price right here. So it actually like does consolidation over the past, okay, over the past 5 years, it looks really fantastic. You can see, but you can see, right, it goes up and it goes crazy down and it goes crazy up and it goes crazy down and then it goes nowhere for the past 3 months or so, etc. Right? So stuff like this is like, I don't really care because it's like I bought it over here. But at the same time, it's like if you're not comfortable with this kind of volatility and it takes up too much percentage of your portfolio, then do consider selling it because you are reducing your risk, right? If you take money off the table, if you sell the stock, you get the money, right? You confirm your gains basically, and don't worry about what other people say. It's like, oh, you're gonna miss the run, blah blah blah. Like, bro, come on, it's just your finance, man. Like, it's just stocks. It's not that deep. So think of it as like, hey, if you just don't feel comfortable, don't do it because it's called personal finance for a reason. It's a personal situation. It's a personal decision. Okay, so if you want to reduce your risk, obviously go and sell it. All right. Okay. This subscriber, what she asked was that, um, how did I know that I was going to sell it? I'm going to sell it at 1 million, for example. Okay, so that comes to my next factor. When you don't think the company can grow anymore, your returns are capped already, and there's no more growth potential. Okay, so the reason why I still hold the companies that I hold today in my portfolio is because I believe in the long-term vision of the company, and I can kind of see like how they are going to grow the revenue over time. Okay, okay, exclude the Bitcoin. Okay, but okay, even in the Bitcoin, I can kind of explain my thesis, right? For him, for example, America is getting sick. America is getting old. Okay, so there's gonna be a very very high need for healthcare and affordable healthcare over the long term, right? So I can clearly see how this company here, at 2 million subscribers for their services, for example, America has 300 million people, right? If they're able to get to 5 million subscribers or customers, right, they're able to grow their revenue. So there's still a story that is like a very, very clear story of this thing is going to happen. People, Americans are getting older. They need more healthcare. They need more help. All right. So like it's a pretty no-brainer to me. There's still a growth story, right? However, if this company, for example, like became too big, right? They already have like 10 million Americans, for example, and then you can clearly see the revenue is struggling to grow over time. Yeah, then potentially I would reduce my holdings and sell my stock, basically. Okay. Yeah, a lot of other companies that are no growth potential, for example. Okay, I don't really have much in my portfolio, but let me just think of one. Um, oh yes, okay, I have one. Okay, because I actually bought this company before. Okay, so Dropbox, for example. Dropbox is like a Silicon Valley darling, right? The IPO a very long time ago, and then the share price basically went nowhere. And this is my early days of investing where I didn't understand like growth story and stuff like that. But basically, Dropbox is a company that does it's basically a Google Drive competitor, right? So their stock price and their revenue has been growing over the long term. But if you see the value of the company, it goes nowhere. It literally goes nowhere. And that's because like the company has no growth potential. It's like really hard to grow in this market of like file storage online, for example, right? So that there's no point for me to hold the stock anymore, and that's why I sold it. Yeah. Okay, so like no more growth potential. You don't think personally, okay, you don't think the company can grow anymore. Yeah, you're going to sell it. Okay. Okay. So to answer her question in depth here, she asked, how did I know that I'm going to sell HIMS at 1 million? Okay. So let me show you or like give you the math right here. Okay. So for example, HIMS, right? Currently their revenue. Let me just go into the annual. Is it? Oops. Sorry. Yes. Sorry. On an annual basis, for example, right now their revenue last year was about what 1.4 billion. You can see here about 1.4 billion, right? And then on a quarterly basis, their revenue is still increasing over time. You can see. Okay. So every year right now they're about a $2 billion run rate per year. Okay. And then I am aware of the fact that a company like Pfizer, for example, Pfizer sells medicine, right? I believe the Pfizer stock is here. Yeah. So a company like Pfizer, what they have is that they are one of the biggest healthcare companies in the world, right? And I'm trying to like compare their stock or their revenues to the stock of HIMS. Okay, this is what I do. Oh, my bad. Sorry guys, give me 1 second. Bit of a fumble there. Yes. So what I'm trying to do is I'm trying to do comparative analysis of like, okay, this company right here is smaller than this company. Okay, and I want this company to grow into the size of this company. Okay, so I can see that this company right here is at $12 billion market cap. Pfizer's at about $136 billion market cap. The reason why I know that I have about 500,000 in this stock right here, I know that I kind of want to sell this at $1 million, for example, is because when this goes to $24 billion market cap, for example, my stock is going to be worth $1 million, right? For example, and then I know that the revenue right now they are about 500 million per quarter. So if they get to $1 billion per quarter, for example, right, then they in the foreseeable future, like it's reasonable to think that the market cap will double as well. And so I do believe that when this company gets to that size, for example, they are just big enough, and then the growth will basically slow down over time. And when the growth will slow down over time, then I will basically sell my stock. Yeah, I hopefully that makes sense to you. But like, yeah, I can foresee that okay, this is going to grow to $1 billion every quarter, so it's about a $4 billion per year revenue company, right? And when it hits that, for example, my stock will be worth $1 million, and then at that point in time I do believe the growth will slow down, and that is kind of why yeah, that's kind of why I said that when HIMS hits $1 million, for example, yeah, I probably may sell the stock. Yeah. Okay, hopefully that makes sense to you. Okay, and then number four is that when you just need the money, right? Of course, everybody has different situations, and don't think that you need to always put your money into the stock markets all the time. Like you don't always have to fully deploy, right? Fully deploying is I won't say it's risky, but it's like you don't always have to be so crazy about your investments all the time. If you need money to go and buy a house, right? If you're going to get married and stuff like that, or you have a kid, for example, right? You need to sell some stock. It's totally fine to do that. It's totally fine, right? But I do know that some people they borrow against their assets. So okay, so this strategy is like a tax strategy. Um, so what they do is that, so imagine they have like $3 million in net worth, right, in their stocks, for example, and then what they do is they go to the bank, and then they tell the bank, for example, I have $3 million in assets and stock, for example. Can I get a loan of like $400,000, right? So they take this loan here, and then the collateral is basically your stocks. So instead of a house, the collateral is just stocks. So if you don't pay back, obviously they'll take your stocks. That's basically it, right? But this year, because they know that your wealth is secured and you have the credit, basically, they'll give you like advantageous interest rate right here, and then you can go and take this money to go and buy some stuff. Yeah, but it's totally fine to also sell your stock if you need, if you just need money, basically, right? Yeah. So these are only the ways or situations where you really sell your stock. Apart from that, like I don't think there's any other reason to. Okay. Um, I'll just tell you also the mistakes that people make. Okay, do not sell. When do you not sell? Okay, so some people, if they see, for example, right, the CEO or management sells their stock, right? So imagine Google CEO, like Elon Musk, for example, he goes and sells the stock, and then the stock price basically gets affected. Okay, some people will go and sell the stock because they think that, oh, because the CEO is not confident of his business, he wants to cash out, and then he's leaving the company, etc., etc. And then yeah, they basically, the stock price gets affected. Okay, this, like, a lot of the times people just need money. Okay, sometimes they just need money. So don't make an assumption that just because the CEO sells the stock means that the stock price is not going to go up, or like the company is going to perform poorly. All right, so that's the first thing, right? If a CEO buys the stock, okay, if the CEO buys the stock, right, that is totally bullish. That's a good thing. So this is a good signal. Like, you should probably buy into it as well because he has confidence in his company, right? But if the CEO sells the stock, it does not mean that the stock price is going to go bad. Like, it does not mean the company is going to do badly. A lot of people sell for a lot of reasons, but people only buy because they believe it will go up. Okay, so remember that. Okay, remember that. Yeah. So the second one, do not sell, is if the price goes down, okay, and the sentiment is shit. Okay. However, the fundamentals are improving. Do not sell the stock. Okay. So this is an example of a company that I own, right? So I own MetaPlanet. It's basically a Japanese company. Okay. The sentiment has been like super shit. I'll just be upfront with you. The sentiment has been like really, really shit. You can see like it's almost a 60-70% drop right here. Yeah, and so basically I held all the way down here, and I continued to buy all the way down. All right. So this one over here, like, even though the sentiment is shit, right, I can clearly see the fundamentals are improving. They are increasing their treasury, they're increasing their assets on the balance sheet. And so, like, over time, the fundamentals will improve and the sentiment will change. Okay. So just remember, like, a lot of people's feelings are very emotion driven. It's like, oh, this stock is shit, this company is shit, let's just sell it. Right. But you must not forget, like, companies exist for a long periods of time. Like, the sentiment or the feeling about a stock can change. Right. People can hate like the Tesla stock, but sometimes they also like it a lot. And so don't believe that, like, if it goes down, it can't go up. It can always go up, but obviously your fundamentals do need to change and improve over time as well. All right. So hopefully this is useful for you. Let's answer the subscribers question. Last of the question. So I hope I answered this part. Is it a particular ROI threshold, or do you sell when it becomes too big of your portfolio? Okay, so her question is that, for example, right, if I buy $100,000 in Tesla stock right here, and for example, do I set a price target, or do I set a like 4x, 3x target? Okay, this is what I normally do. I look at the risk to reward ratio, right, and I say that, okay, I put in 100K, for example. If I just 3x the stock, 3x my holdings, right, and then I will basically get 300K, and so the profit is about 200K, and it's like it's gonna beat the market, so it's gonna beat the S&P 500. Then yes, I would sell the stock there. I normally do set like a certain multiplier amount that I want, of like, okay, I want a 2x, I want a 5x, I want a 10x, right? Obviously, like, 10x's are very, very rare in the public markets, but if you actually can do that, it's like you're really good at investing, basically. Okay, but yes, in general, when I put in a certain amount, I am looking at a certain, like, X percentage. So for example, I bought about 300K worth of Bitcoin at the end of last year, at the end of 2024. And so the projection for Bitcoin is basically that it's going to go to 200k this cycle, right? It's looking kind of unlikely, but that was my projection. I was thinking that 300k could become like 600k, basically by the end of the year. Okay, so that's just a projection. It may not happen, but it's like in your mind there is a statistical number that you're looking at of like, okay, I'm going to sell at this point in time, something like that. Okay, so yes, I do actually look at the multiplier right here. Okay, and then how do you think about the strategy to rotate these stocks around? Okay, so I think there was one big rotation that I did. So basically, I bought Palantir at about $12, and then I sold it for like 60. So I basically like 4x my money, and I put in I think about 44k, and then it went to 200k, basically. So I had about 200k of like cash. Okay, so this 200k I did rotate around, and then I went to buy the Bitcoin, and I went to buy like MetaPlanet, which is a Bitcoin related stock, basically. Yeah, and the reason why I did that is because like the narrative always changes. Okay, I'll just write this down. The narrative or the sentiment in the markets always change, right? So for example, like Trump gets into office, and then the sentiment about crypto is like everything's going up, and like the sons, Eric Trump, for example, they're all investing in the crypto, for example, and so that's the sentiment and the narrative of change, right? So I'm basically rotating my money into what the sentiment of the stock is, or the market, right? So like recently, or like over the past year or so, the sentiment has always been AI, Nvidia, the hyperscalers, right? They're always about AI, capex, Google, Facebook, Amazon, etc., etc. Like this is basically the story, right? So you just follow the story and rotate your money with it. Another story that has occurred in the past 6 months, especially after the tariffs, is that gold. For example, gold has been like there's a lot of uncertainty, right? Trump is basically a terrible president. Sorry, but like he's just running the company really really volatile, and like there's like war happening, there's like inflation happening, there's like economic crisis coming, like a lot of shit is going on basically, right? So like when this happens, gold is the story. They all the rich people, they will take their money and then they go and buy gold because they trust gold. They don't trust America, they don't trust Trump anymore. So that's the story, right? You want to rotate into the story, the strongest story that you believe in personally, right? Currently, like in today's time, like 23rd September, these are the strongest stories that are happening right now. The story may be different like next year or so, right? You just need to figure out what the story is and just ride the wave of the story. That's how I think about things. Okay. Let me guys show you I believe the gold ticker is it XAU? Gold. Okay, my bad. I'm sorry. It's not this company, by the way, but I believe that their stock price has probably also increased because gold has increased at the same time. Yeah. Okay. So yeah, that's basically hopefully that answers your question. And the last question that I'll answer is you mentioned in the earlier part to not bet your whole portfolio on the stocks that you hope to generate alpha returns. Do you recommend to invest a percentage in S&P for base returns in parallel? Okay. So what the subscriber is asking is actually a really good question because actually I did this previously. Okay, so what she's asking is that instead of you picking like 5 to 10 stocks in your portfolio, which is actually what I do, this is actually risky. Okay, like I'm literally picking companies and trying to beat the market right here, which is a very risky move. Most people should not do this. What she's saying is that maybe you can go ahead and still pick your favorite 5 to 10 stocks, but you also buy the S&P 500 index. Okay, so this is a very common strategy for most people because they don't have time to think about things. All right, so um, last time I used to buy like I think had about like 35k of like S&P 500 because I wanted exposure to the overall market. That's the first thing, right? And then the rest of it I just bought my favorite 5 to 10 stocks. Okay, but my S&P was like maybe like literally like what 2 to 5% of my portfolio. Not a very good situation. But the older you get, right, the less risk you want to take because yeah, I mean in general it makes sense, right? You want to protect your wealth over time. So as you grow older, you might want to increase your S&P exposure, right? So what she's saying is a base return, right? So the S&P normally returns at about like 7 to 10%, right, every single year, like compounded annual CAGR, right? And so like this amount, you're basically guaranteeing that you get 7 to 10% minimum, right? Be it up and down market does not matter, right? And so a lot of people, I know my aunt for example, I do believe like she's like 80% S&P, 80% S&P, and then she goes and buy like a Tesla, or she goes and buys some other company like a Google or Facebook or an Amazon, stuff like that. Yep. But you must also remember, right? The companies that you are investing in. Imagine you have 80% S&P 500, but you have like 10% Facebook, you have like 10% Google, right? These companies right here are literally in the S&P already. So you're having like double exposure, if that makes sense. You're just having increased exposure in this thing versus this. So it just depends on your risk appetite of like, if you need a base return just to make sure that you have your bases covered and you have you don't blow your portfolio basically. Yeah, I actually do recommend for most people, right? Yeah, definitely have a double digit percentage of your portfolio in the S&P. I know some people who are working in the banks, for example, they literally have no time or no money. They have no time, but they have money, right? So they just have 100% S&P 500, right? S&P index, something like that. Okay, I'm a bit crazier, so I don't do this, right? I'm doing the complete opposite of this. Yes, but it depends on you, right? If you want to put a 30% S&P, if you want to put a 50% S&P, it's totally up to you. There's no right or wrong. But I would just say, like at this point in time, like the the launching of this video, like today, 23rd September, for example, the S&P is at like its record high. It's like the highest it's been ever. So just take that into consideration. Like it's pretty high. Okay, I'm not saying it won't go any higher because normally strength buys into strength. Okay, like stronger stuff buys into stronger. So there's more FOMO. People buy even more and it goes even crazier higher. But just be a bit careful of like, yeah, the index is the index for a reason. It's supposed to be the baseline. So don't expect it to get you rich like super, super quickly. You should not expect anything above like 7%, honestly. Okay. So if as long as your stocks, right, your individual stocks, for example, they do have like more than 7% of returns, I see that as a win. Okay. What do I mean by that? So for example, my portfolio, right? This year, okay, let me see if I can compare the portfolio. Oh yes, okay. So you can see here, right? I'm beating the S&P by 58%, for example. Okay, so as long as I beat the S&P, I'm pretty happy. Okay, if I underperform the S&P, that's the only way I basically like I failed basically I failed my mission. Okay, but if I am on par with the S&P, it's fine as well. Okay, S&P is basically like she said, it's basically the base layer of like everybody can get this return because they can just buy the S&P and achieve the same thing. If you can outperform the S&P, then you are pretty solid, you're pretty good. Yeah. Okay, hopefully that makes sense to you. Hopefully this video is useful for you. But just remember, guys, at the end of the day, don't hold the bag, right? This is your money. This is your hard-earned money. So you want to grow it, and obviously you want to protect it as well. Don't lose money. That's number one. And number two is that don't be stupid. If you buy and then the price goes down, right? Don't just sell it just because you feel like shit. Like actually look at your investment, look at the company, and see the fundamentals. Okay, most of the time you can basically hold it and just don't look at it. Just don't look at it for a couple years, and most of the time it recovers if you bought the correct company. All right. And once again, don't be afraid to actually sell your stock. If you need to go and sell stock. If you need to pay for your house, get a kid or something, right? Just go and do it, man. It's fine. It's just stocks. It's literally just stocks, guys. Just game, right? So just keep that in mind. All right. So hopefully this makes sense to you. Let me know if you have any other questions, and thanks for your time.